we'll get started now with our last few sessions of the day. And what a better way to kick off those last few sessions than with another great panel discussion. So for this panel, we'll be talking about success to collaboration. In this session, Bendigo Bank's Managing Director, Marnie Baker, will sit down and explore with the founders of Up and Tic what has made their partnership so successful, insights into industry collaborations and challenges faced along the way. Joining Marnie today is Dom Pym, who is the co-founder of Up, Australia's first next-gen digital bank, and Anthony Baum, founder and CEO of TikTok, a platform making financial services faster, smarter and simpler. Our moderator for this session is Lynda from Vault Bank. Lynda has 20 years' experience as a corporate finance advisor to financial institutions and private equity, including working with government and regulators on policy settings. Can't wait. Thanks, guys.
Thank you. It's good. I don't have to do the intros. Look, thanks so much for joining, everyone. I must say it's been really good to see so many people in person today. I think it's been over a year for many of us to get together. So a big thank you also to Fintech Australia for putting together the conference. What I'm excited about in terms of this session is exploring sort of the collaboration between sort of Bendigo, Up and TikTok, because for me, I mean, obviously the partnerships are delivering different banking services. You've got TikTok delivering digital home loans and lending as a service, and Up on the other side of the balance sheet with savings and transaction/spend solutions. But for me, I sort of feel like, well, both partnerships were formed under 5 years ago, right? And you've had amazing growth, and I think it was the first step in the domestic market for an incumbent regulated retail bank to partner with a tech platform in this way. And I think incumbent banks have really struggled with their innovation agenda and partnering with others, and coupled with that, you know, the modularity and platforming of financial services, or platformication, as I know Anthony's used that word before. So really interested to explore that. And I think maybe, Marnie, let's start with you, and be interested to hear, you know, from Bendigo's perspective, how these partnerships came about and how have they contributed to Bendigo's digital strategy, and perhaps how you've managed that alongside Bendigo's direct business.
Thanks, Lynda, and it is wonderful to be here. It's wonderful to see people in the flesh, and we've got lights in our eyes, so it's a bit actually hard to see you all. I think we figured it out. It was 2017. Dom, we were sitting up on the stage here at Intersect, talking about this. It was very early into our relationship. It is interesting that we are an incumbent bank, a 162-year-old legacy organisation, but one that has always had a philosophy around partnering. So this isn't new for us. You know, I know that it's called Fintech now, but in my day, and I've been with Bendigo and Adelaide Bank 32 years, and right from the start, whether it was startups or entrepreneurs, came under different titles at that point in time, we have partnered through distribution, manufacturing, and technology of more recent times. So it's not something that was new to us. We recognise our strengths as an organisation, and we also equally recognise where others may have strengths that we don't have. So, you know, I think what I've got beside me here today are two of the most successful partnerships that we've had, you know, from a technology perspective in our organisation. And they are at different levels of maturity. Dom, and it is a lot longer than 5 years, it's 10 years, it's a decade since, you know, I remember Dom and his partner, the two founders of Ferocia, actually approaching us and talking to us, coming in, and they just walked in and wanted to talk about how they could reimagine banking. And what piqued our interest at the time was the fact that they actually weren't bankers. And so came from very much from a customer perspective about, you know, how difficult it was to to do what that people had been doing for hundreds and thousands of years if you go across the world. And yet here was this new way of thinking about that. And so we partnered. It was pretty exciting. We didn't know where it was going to go. Partnered around our e-banking platform, and that was our sort of foray. But there was always sitting in the back of the mind, and it was something that Ferocia were really keen on, was actually a digital bank. And that came more to fruition in 2018, but after a lot of years of thinking and putting things together. And then, of course, you've got, and it really was, and the thing that I liked, it was looking at, there was a segment of the demographic, so the younger demographic, where perhaps traditional banking wasn't going to really cut it. And so the thinking that Ferocia brought around just reimagining, savings and spending really sort of resonated, and it was to a market that we were trying to get some traction into. And then you've got, I'll say, the other side of the balance sheet, because I'm a banker, on the lending side. And Anthony was well known to the organisation, approached us. He'd worked in banking for a long period of time and understood where those pressure points were and where that friction was in the customer experience from a home lending perspective, and came, talking about this solution or this platform that was going to be able to actually go from end to end in the home loan journey, and the time that he was talking about being able to go from an application through to when funds were actually placed in someone's bank account was pretty amazing. And I thought, this is something worth actually getting behind. And I think 2017, roughly, was that. But again, these conversations and getting to that point of actually launching do take some time. I'm really proud of both of these partnerships. They, like I said before, they are what I would classify as the most successful in the shortest period of time that we've done, in our years. And I'm really looking forward to what the future brings for both these partnerships.
And yes, sorry, I mean sort of launched in the last 5 years. Obviously, things were happening in the background way before then. So maybe I'll start with you, Dom. I mean, like from your perspective, I mean, why Bendigo, and then and how has that kind of collaboration enabled your growth since then?
Yeah, sure. It's thank you, Marnie. That's very kind words. It's definitely a journey. It's not something that happens instantly. I remember fondly those first meetings because we were just a couple of blokes with an idea, and from Bendigo's part, the way from my perspective, the way I tell the story is that Bendigo, Marnie, and at the time Mike Hurst took a big punt on us. And it's brave because it's in the DNA of Bendigo to partner, as Marnie said, and they've done a lot of innovations over the decades that many of us in the room might not know. The community bank launched 20-something years ago. Introducing the debit card to Australia in the 80s. Lots of cool things that people don't know about Bendigo necessarily. And so Bendigo has a DNA of innovation and partnering, and it was fortuitous for us to be in a conversation with them and saying, well, they're going to build a new internet banking. We could do that, or we could have a crack at it. I remember that fondly. I also remember years later, about 6 years later, when after we'd built a relationship of trust, and I went to Docklands. Bendigo have an office in Docklands. I went to Docklands to meet with Marnie to talk about this crazy idea about a digital bank. And I think walking out of the room was one of the other founders of a digital bank, and Marnie had been meeting everybody. But we had a leg up because we had built this relationship of trust.
I was just keeping him honest, that's all.
That's right. And why Bendigo? Like, we actually, over the last, I'm going to say 7 or 8 years, Ferocia has tried to build a digital bank with 2 of the big 4 banks here in Australia, one of them into Asia, and also the largest credit union in Australia. and I won't say who all the parties are, but you can work it out pretty quickly. Those were very difficult relationships for a fintech to work with a big incumbent and really get off the ground. So I think when we're working with the credit union, they had 400,000 or 500,000 customers already, and we were coming along saying we're going to change the world. And then same with the big banks, except they had 10 million customers or whatever, and one of them was making $53 billion in 16 countries, and we were coming along telling them how to run their business. So I think with Bendigo, what we got in Marnie and Mike at the time was a shoulder, an ear, somebody to listen, and somebody to take a leap of faith in that these crazy entrepreneurs could actually make a difference. And here we are now, I would say we're about 4 years into the journey, if we go back to 2017, but we've been launched in market for about 2.5 years, and we're just closing in on 400,000 customers. So, with Bendigo, working with Bendigo for 10 years, we're about 2 million customers, and now we've managed to create in just 2 and a bit years nearly 400,000.
And what is that in terms of a deposit book?
So we don't release all the information, but I can say we're close to about $1 billion in deposits. So it's pretty significant. Like a lot of the neobanks have very low deposit bases, or they're not the primary account that people use. So what we've seen overseas is that your N26, your Revolut, your Monzo, these like really famous digital banks, but the average deposit that someone has will be low, and they won't get their salary transferred into that account. They'll keep using their traditional bank and just use it as a spender or a traveller or whatever. We've actually seen almost the opposite with Up. Our number of active customers is globally best in market, and our number of customers that use the app to buy something every single day is unparalleled across the globe. And the number of customers, nearly 50% of our active customers get either their salary deposited to their Up account, or they transfer in $1,000 or more every single month. And so we use that as a proxy for a salaried customer. It's highly unusual for a digital bank to have that level of engagement and traction. So I think it's been not only successful in such a short time, but also successful in terms of what we've been able to do, not just for growth, but also for engagement. And the next stage for us, which we can talk about, is monetization.
Yeah. So maybe Anthony, a bit about the TikTok journey, and I know you've made some exciting announcements recently about other partnerships. So would be interested to know how sort of the collaboration with Bendigo has enabled that.
So we had a vision like Dom, but ours was different. We felt that we could change the way Australians got their home loan, basically. Too long in the industry, seeing too much friction, as Marnie mentioned. And we wanted to be really, really good at customer fulfillment and really, really good at building the technology that enabled what we thought was possible. And so what we needed was, if we were going to focus on that and not have to worry about regulation or massive amount of capital to fund home loan books, we needed a bank to partner with. I was an ex-exec at Bendigo and Adelaide Bank, so I actually had an intimate knowledge of their ability to partner. And a lot of the advice I had when we started on this journey was, be really careful who you partner with. It'll actually be one of your defining factors. So I, in a different way to Dom, but same principle, sought out Bendigo and Adelaide Bank to partner with TikTok to basically help us support, build our platform, and to provide a balance sheet that we can actually put the home loans on. And I think there's a unique thing about TikTok that everyone should contemplate, and that is that, yes, we had to go through a lot of process and validation and governance that normally sits inside a regulated ADI, because what we were actually able to do and our technology can do is put a home loan on Bendigo's balance sheet without any human intervention. And we've gotten very, very, very close to that. But not only have we done that, we've actually proven over 3 years that you can do that and generate an asset quality and a responsible lending outcome that is, frankly, we think best in market. So the key for us was, it was about finding the right party to partner with, and it's about leveraging each other's strengths. If we think about, I do talk about platformification. I do believe the industry is breaking into a series of brands, technologies, and balance sheets. Society's capital will always be regulated, so ultimately the big incumbent and medium-sized incumbent banks actually have a natural competitive advantage because they're already regulated to collect and distribute society's capital. And then actually one of the defining differentiators that I think Bendigo does really well is it's worked out how to partner with technology and or brand, and they can fit together, or in the case of our partnership with Aussie, TikTok, and Bendigo as funder, the two brands, actually leverage everyone's relative strengths, as Marnie talked about, and 1 + 1 can equal more than 2. And I think if you listen to Dom's story as an example, there's a case in point that's not even our case, I guess.
I think it's really important not to leave everyone with the glow of the partnerships always being being rosy.
Let's hear the war story.
Because we do talk about this from time to time as it being like a marriage, and you do come together because you have a common goal. It's really vital that you actually have a common set of sort of values as well, and a mutual respect for each other. But just like a marriage, most of the time you love each other and you love the children that you've produced. But that's not all the time. There is tension that comes into any relationship. But if you don't have, and I think if you don't have that level of respect that's there, and that common set of values and outcomes that you're looking to produce, that makes it really hard when you get to those, I'll say, more testing times. I talked before about being a legacy bank in 162 years. We run at a different speed than a fintech does. I would love to say that our organisation is running as fast as what these guys are, but it does my head in, but you just don't. And it's really hard to do that. So whilst we might have the same common goals, there will be tension that will occur. There'll be tension because, in the end, it's our licence and we're the ones that will get in trouble by the regulators when something doesn't go right. That can slow. That can slow down, a process or something, and it may not necessarily be understood why that sort of does. So, yeah. So it's not always rosy.
So I guess what has been some of those challenges, and I guess I'm sort of trying to link this back to why other incumbents have, why it's been a struggle to partner, because I think, others have tried to build in-house or, have their venture funds rather than kind of really sort of collaborate and partner directly. So what has it been?
Yeah, I'll say one thing. I'll hand over to these guys because
they jumped in already.
They'll probably may have something different. But, one of the things right from the start, you have to, and again, like a marriage, you have to give each other space. And the hardest thing for an incumbent and a big organisation, because big organisations tend to be proprietary, they tend to want to own everything, they want to run everything themselves. And one of the hardest things to do is actually to get out of the way. And I think, that's really key to partnering when partnering between an incumbent organisation, a big incumbent organisation and a nimble, like Fintech, is just recognise you've actually got to get out of the way because you can stifle the creativity and the change that you're actually wanting to achieve. So from my perspective, that's the biggest call out.
Yeah, so move over then. I'll say there's probably two things for me that resonate. One is having an aligned, I call it the moral compass, but it could be the guiding light or it could be your Northern Star or whatever you want to call it. But like when we first got together with Bendigo, it was about defining what is it that makes us the same, like what is that goal that we're going for. And so that was important, and the community aspect of Bendigo and the ethical aspect and all that was really important in terms of making sure we were aligned in the outcome. because you can sort of go in and pillage and destroy, but that's not interesting for either of us. So I think having that alignment is the most important thing. We didn't have that alignment with some of the other banks that we worked with, for example. So that's really important. And then the second one is, sticking to your strengths, what the other guys said. But we actually defined, even before Up, we defined the 3 sort of objectives that we wanted to set out to achieve as a partnership. And one was to build the best thing. We wanted the best customer experience for what it was we were building. That's fine, tick. The other was that we wanted to have a cultural experience. Like, we actually wanted to share and help each of the organisations to understand and appreciate. So from Ferocious perspective, there was a lot of understanding how a bank operates, how Bendigo operates, the rules and regulations, the compliance, meeting with the regulators, all that sort of stuff. And from Bendigo's side, it was the stuff that Marnie mentioned, like how do we learn the technology, how do we go faster, how do we adopt some of the cultural practices and so on. So number 1 was experience, number 2 was culture, and number 3 was we've got to make money, like commercialisation. And so by defining those 3 things in the very first contract that we ever did together, it actually set the tone for the whole decade that we've been working together. Because now whenever we do something and we have a blue, we have an argument, we disagree on something, whatever it is, we can always come back to those principles and say, are we morally, ethically aligned in the outcome that we're trying to achieve? Is it good for the community? Is it good for the environment? Is it good for the planet? And then we can say, okay, does it meet our objectives, commercialisation, cultural, and best experience? And so for me, setting those foundations up front, even though it was 10 years ago, they're still relevant today. And it really helps us to frame all the different things we do, especially when we have an argument.
And I think, I think the other thing that for a fintech wanting to collaborate with an existing financial institution is you have to be able to ensure that you invest enough time in that partnership as well as your customer proposition. The bank won't do it all for you. You need to be able to understand what are going to be the points that are going to be contentious, or when they're raised, respect them and find a solution. You can't just assume that you're right, they'll accept your position. There is a lot of investment that goes into partnering well from the fintech side with a large organisation that, to the point that was made earlier by Marnie, has all of the regulatory obligations that a bank does, for example, shareholders, capital to protect, all of those things. So if you're thinking about going down that pathway, pick the right partner, but also make sure that in your relationship base, there's the ability to sufficiently, and different organisations do this to different levels depending on the proposition, walk in the shoes of your partner and be able to know what you need to navigate to be successful.
And it's not always going to be perfect, right? Like when we first started the relationship, I think we committed to
This is therapy, I think.
Yeah, I think we committed to just a 3-month trial when we first met each other, and along the journey, Ferocious now worked with 4 or 5 banks as well as other fintechs and other companies, and during that journey, we don't still work with all of them. We only work with some of them, and it was fortuitous that Bendigo was at the start and we're still working together. You can't always pick the right ones, I guess is what I'm saying. It's one thing to say, make sure you pick the right partner, but actually you make mistakes too, and you pick the wrong partner. And what you have to do is quickly identify that and then move on and find that right partnership and define that partnership. So for us, it was a 3-month trial, and then once we sort of did a live demo of moving money in Mike Hurst's account, then we got the 1-year contract, and then it became a 3-year and a 5-year and so on. So I think that you live and die by your merits, but you also can't always pick the right answer. And so if you have an argument or a debate or a disagreement or whatever it is, that shouldn't necessarily be the end of the relationship. But if it is untenable, then you need to find that right partnership so that you can all feel at home and produce that awesome product.
So I'm just conscious of time, but I did have a question in terms of, I'm really interested in how this has enabled you to partner and collaborate with others, and also I guess sort of where does this partnership go from here?
Can I jump in quickly? Because
Yeah.
one thing I'd like to say is that when we, particularly for Up, when we agreed basically Marnie and I got together with our partners at the time, Tomo and the rest of the exec, and we said, this is what we want to do. We had no idea if it would work. Like, we were very confident, and we did a great presentation, and everyone was excited, but we really didn't know whether it would work, right? So there was a risk. And what we did was we took Bendigo's backing as that level of confidence for us to be able to go and take the first steps. Now, as it turned out, it went really well, but it wasn't a smooth journey. And so I think that when you first start that relationship, the relationship that we had wasn't perfect, and we've iterated on that. And we're at the stage now where we're looking at the first 2 years for us was launch, and we're 2 and a bit years in, and the next 2 years is going to be growth. And so Marnie and myself and others are talking right now about how do we take this partnership to the next level? Where do we take it? How do we restructure it? Do we look at the longevity of the relationship? Do we look at the responsibilities that each party has? Do we go back and revisit some of those original foundations? Do we raise capital? All those questions start coming up because the relationship has been so successful. So it can either go down the path where it goes really bad and you have to change it, or it can go really good and you still have to change it. So I think it's important that you need to adapt, and it's not just like one size fits all. And then also the other thing I was going to add is that along that journey, because of our relationship with Bendigo, we've been able to partner with TransferWise and Afterpay and these huge names in fintech, and we've been able to do that as a first mover, and we've worked with Apple and Google and MasterCard and so on, and we've been able to do all those things and do them bigger and better, some of them world firsts, some of them Australian firsts, but all the way along Bendigo's had our back, right? So if you get Bendigo to support us, then we're able to bring product to market quicker and earlier and faster, and we can, like Marnie said, if they leave us alone, we can get on with just getting the job done. And I think that that's been the secret of the success of the relationship.
Yeah, and I think, a good example of what Dom talked about from a TikTok perspective is we now have, the Aussie brand on our platform. We actually have our first module of our platform used by a number of other organisations, both here and now in New Zealand. So, effectively we're empowering others to try and develop propositions like TikTok with some of our technologies. So when Marnie talks about getting out of the way, so to speak, it's really, you got to live and breathe that in a way. We've probably taken an approach where we were really, I think we did a good job of defining the boundaries up front, and I think that's really helped us and given that clarity. But yeah, that's, for us, we have our core market. It's growing really, really strongly. I think we are at the point for home loans where it's gone slowly, fast into that digital segment. But we're constantly exploring the breadth of where we can take our business and our technologies to, just like you are.
I have one more thing. I just really want to get it. I know we run it practically on time. Just last thing is that in the last couple of days we launched a new product, and the product is there was a quote that came out last night. It was on like LinkedIn or Twitter or something, and it was like, "This is not a feature. This is a movement. This is financial literacy," something like that, and it just brought a tear to my eye. But actually, we would not be. It's a joint account. We call it 2Up. We would not have been able to launch that product, and we've seen our sign-ups double in the last couple of days just because of that one product. We would not have been able to launch that product without the support of Bendigo, because Bendigo literally provides the regulated bank accounts that support that product. So I just want to make the point that in order for us to continue innovating and doing what we're doing, we need to have the strength of a partner and the trust with that partner in order to be able to keep doing this awesome stuff. So thank you, Marnie.
Excellent. I mean, I guess we don't have time for Q&A from audience, do we?
Yeah, I think we'd better keep moving. Sorry about that, guys, but thank you so much. That was such an insightful panel, and great to see what can happen when banks and fintechs partner together in a really, really true way. So thank you so much, Marnie, Anthony, Dom, and Lynda. And we'll move on to our next panel. But thanks, guys.
Thanks everyone.
Thank you.
Thanks, everyone.
And I'll welcome